Welcome back, everyone. Professor Joshua White's with us, Assistant Professor of Finance at Vanderbilt. Always a pleasure having him on. And we're talking about cryptocurrency, things like Bitcoin. And we are going to take some phone calls here, but also get in later on some sweeping oversight that the U.S. government's looking at to try to regulate some of it. But we have James waiting through the break. Let's take his phone call. James, good morning. Hi, James.
Good morning, guys. How are you?
Good. What's on your mind, James?
Bitcoin is currently trading for a whole coin at 23,639.30 for one. Here's the bad part with this. You only need to invest in 20% of your portfolio because there is parliaments and nations all over the world right now regulating it and blocking it because they do not want it taking over their currency. Bolivia, China, Colombia, Egypt, Indonesia, Iran, India, and Algeria already have blocked it and are restricting use.
Interesting. And let me ask you this, and I'll have you talk about why they're worried about that and what the dangers could be. But you sound like you know a lot about it. Have you invested in it, James?
Yes, way back when.
Okay, so can you give me an idea? You hear me, I'm a dummy on it, and you sure sound like you know what you're talking about. How has it worked out for you? Have you made money? Have you been able to cash it in? Have you spent it?
I picked a point where I said, this is my get the hell out point, and that's exactly what I did.
How come? Was it just too volatile? What's your concern about it?
I dumped it in the 90s because of a wreck I had, and it was at the point where I said, I'm done.
Did you make money or lose money? Did you make money or lose money?
Oh, I made money, dude. When I bought it, it was so cheap. You could have bought it for 19 bucks a coin.
And when you sold it, so if you made good money, why did you just get out of it then?
Because of parliaments. I was told back then, hey, this might not be the best thing to put your money in, little man. You might lose it.
Interesting. All right. Boy, James, thank you for your call, and good for you. It sounds like he had a positive experience, but he's concerned enough that he sees what's happening around the world. What are the dangers that these governments are concerned with, and why it would scare someone like James off, even though he made money?
Yeah, so as James mentioned, and congrats, James, on getting in so early. As James mentioned, a lot of countries are concerned that Bitcoin could destabilize their ability to control their economy. So China is one that has banned Bitcoin along the way. They've actually launched their own central bank digital currency, which they would like Asia and sort of Eastern Europe to use as the currency that businesses would transact in, something that they can control. The threat to these countries, the fact that Bitcoin is decentralized, means that they do not have control over it. And so as you're seeing now, we have, some economic headwinds, we've got inflation. Governments would like to be able to control the money supply and control interest rates to seek certain goals. And if Bitcoin takes off as the currency of the world, well, it's going to be outside of their purview and outside of their control.
Yeah. Okay. And before we get more into control, which will be the issue, if it went that way, I'm just curious, tangibly speaking, every 2 weeks I get paid from News Channel 5 and get a little direct deposit, goes in there, and there's my money. I don't see cash much anymore. I do almost all plastic. It's all electronic, and it's in there. And I decide I need to go to the grocery store and get some stuff. I pay for it, and I assume that's the dollars that's going through. And is that the same way cryptocurrency? Could I someday be paid from a company like News Channel 5 in cryptocurrency, and would it work just the same way?
So you could, but you could also just take the money that you're paid in cash and just convert it to cryptocurrency. Now, cryptocurrency, there's a tax treatment of it, and that if it goes up in value, the IRS wants to tax that as a capital gain. And so where a lot of the uses are coming from in crypto is people like James that invested early, maybe the price went up. They would like to buy things with their cryptocurrency rather than converting it back to fiat.
So when he says, and I didn't ask him this, he says he made money when he decided to get out. I'm assuming, he bought a lot of those Bitcoins at a low price. And when he decided to get out, he went into the marketplace and sold them and got dollars. Someone paid him cash, money, dollars, for those, and it was more than he paid to buy them in the first place, and that was his investment, right?
Correct. So that would have been his capital gain on the investment.
Okay, so that's how that worked out. Is this the way it works out now? I mean, people still buy it and sell it. They buy it and hold on to it. Is there a way I can go spend a Bitcoin without transitioning it to dollars?
Yes, and that's really where a lot of the innovation has happened in this space, is the ability to use cryptocurrency to transact. There's something known as a stable coin that we can get into, and a stable coin tries to peg digital currencies to dollars to help facilitate those transactions.
But would I be able to do that at Kroger? If I go into Kroger now and say, I want to buy my groceries, here's my Bitcoin credit card, and they're going to look at me like, no.
Right, they're not, but they want to. There was a survey coming out of Deloitte in the last few weeks that said something like 80% of companies they surveyed wanted to be able to accept cryptocurrencies, but they also don't want to expose themselves to the risk. Kroger doesn't want to sell you groceries in Bitcoins, and then the price drops 10% in a day, as we've seen in the last couple weeks, and now they're assuming that risk that they don't want to take as a business.
Sure.
So that's where some of the challenges lie ahead in being able to use cryptocurrencies to transact.
All right. I guess we see it going in that direction, which is why our lawmakers are taking a hard look at it. You've talked a couple times about regulation. Why don't we go there a bit? What are they going to try to do? That I assume if they get this in place, if I feel that there's more regulation there, I might be more comfortable going into Bitcoin. I'm not there myself yet now, but what will they be looking at?
Yeah, so there was a bill introduced.
Okay.
It was a bipartisan support, Senators Lummis and Gillibrand, and it's going to be referred to as the Responsible Financial Innovation Act. What they're trying to do is to put some framework of protection in place. Cryptocurrencies and digital assets in general, there's been a lot of enthusiasm for them. But it's also been a bit of a Wild West, right? Sort of some of the allure of digital assets is this notion of being decentralized or outside the control of a government. Well, now we're starting to be concerned because the value of cryptocurrencies has grown so much, it could be a source of potential systemic risk. But there's also a lot of opportunities in using this technology that companies want to innovate. There's startups, there's billions of dollars poured into crypto startups last year. And so what this act is going to do is to start the discussion of what framework needs to be in place where we can balance innovation but also investor protection. We don't want people, putting all of their life savings or retirement in a very volatile asset that they don't know how it functions. And so financial education, literacy, all of that's going to be a huge part of it.
I guess that all makes sense, and I think that's really important. As you said, an awful lot of money is being invested in startups right now. I'm curious, had there been a void? Who was it that sat down years ago and said, we need a cryptocurrency? What we have now, there's a market for this and we need this. Were people clamoring for a new type of currency? So
cryptography, which is the technology that underlies the blockchain, is something that came out of the computer sciences, where we saw it convert into essentially Bitcoin. Bitcoin was the first. There was a white paper, which is something that you publish as you describing the technology underlying the asset.
Yeah.
There's an individual known as Satoshi Nakamoto in October of 2008 that put out the white paper on Bitcoin. Now, nobody knows who this is.
Okay.
Nobody's ever revealed this person's identity, so we think it's probably a fictitious name. But that technology, once it's out there and established this sort of decentralized system where Bitcoin is established, there's miners that verify the transaction, there's a value around it, that's when it really took off. And so we've seen growth. That was 14 years ago. We saw market cap exceed $3 trillion last year in cryptocurrency.
That's incredible. Now I wonder, without the regs and stuff, I mean, we all know about fraud when it comes to traditional currency, counterfeit bills and things like this. Without any regulation, that's the other thing that kind of frightens me, is thinking, if I'm going to get into this, I mean, how do I know? It's got to be just a rich arena for fraud.
It is. And in fact, it's not only a rich arena for fraud, a lot of fraudsters want to transact in cryptocurrencies because of the allure of the anonymity or the anonymity in it.
Right, exactly. It makes it real hard to track them down.
Right, it's more difficult, although we have improved. The government has, figured out how to track digital wallets and transactions, and they've improved over time. And so, attracting fraudsters is one of the reasons that this potential legislation is important, because you want a framework in place where people can use blockchain technologies to maybe overcome market frictions. So maybe there's a third person that's involved in a transaction now that cryptocurrencies can eliminate. Well, that's better for consumers because somebody else's hand is not in the pot taking money. The technology can be efficient. It can potentially provide real security in transactions because they're verifiable on the blockchain. But if it attracts fraud, then does that cost of attracting fraud outweigh the benefit of the technology itself? And so that's what this framework is going to start discussions on. How do we set the rules such that we both protect investors but also don't dampen innovation?
Take a break on that note. When we come back, we can take some more calls. We'll continue our conversation with Professor White about Bitcoin, cryptocurrency. I mean, it's not something that really goes in your wallet, is it? It's something that you would maybe carry on your computer, your cell phone, or whatever, and you may be able to do transactions that way. And what percentage? 17% of?
17% in the U.S.
In the U.S. So more people are getting into it. At some point, I'll give it a shot. We'll take a break. Be back and continue our conversation right after this.